Okay, so let's unpack those movements now with Makwe Masilela of Makwe Fund Managers. A very good evening to you, Makwe. Now, the market in early afternoon trade was holding back quite a bit, a lot of cautiousness ahead of what was going to be coming out of the US Federal Reserve. We've ended off the day on the local bourse, 1/3% in the green. But what did you make of today's overall movements and some of the major contributors?
I think the market, as you said, for a better part of the day was in limbo, and all because of the concerns that market participants are having. And truth be told, we've been seeing that so far the stock rally this year has been great, but unfortunately it has been depending on few stocks, so that's more of a concern. And you can easily say it has been a very long rally, but as we know that markets are cautious ahead of the interest rate decision next week that the US must be making, and now we've got the services sector numbers from the US. Remember, it accounts for 60% of the economy, and that number was not that great. So as a result, it reinforced expectations that probably interest rates next week might be paused. And also we saw this morning where the Bank of Australia surprising us, increasing by 25 basis points. And remember, next week as well, we have the likes of the European Central Bank making an interest rate decision. And so far, their president indicated clearly that as much as inflation might be cooling, it's still at elevated levels, and it might be too soon to call this a peak when it comes to interest rate increases. And also we've got an interest rate announcement coming from the Bank of Japan. But I think also our GDP numbers managed to help the rent as well, and maybe that is why our financials have been doing most of the lifting today when it comes to the local bourse.
Yeah, a love-hate relationship that we're having with Brent crude oil. Those prices down again after giving those who import food, or are net importers of fuel like South Africa a bit of a scare with the prices we were seeing yesterday. What would you say is the short to the medium-term outlook for the price of Brent crude, Makwe? We've heard from OPEC and the production cuts, but also it doesn't seem that economies are guzzling oil or are doing as well as they would as was anticipated earlier on.
Definitely, and what we saw yesterday, it was a knee-jerk reaction. Remember, on Sunday we had the de facto leader of OPEC, which is Saudi Arabia, announcing that they will cut their production or pledging to cut production by 1 million barrels per day. But now markets after that are starting to weigh the fundamentals of the whole situation. And now markets are worried about the global economic outlook, and seemingly it's not convincing. You just said in your intro as well that looking to South Africa itself, they expect the likes of 0.1% increase when it comes to our GDP. And it's not only us that are expected to give more of a lackluster performance when it comes to the economic growth. So yes, you are right. If economies are not growing, then definitely there won't be any need for demand, and hence maybe we see oil prices continue to struggle.
Let's get on to some company updates. So we had a Premier Group. So they are a food producer, the likes of your Iwisa, Blue Ribbon Bread, Snowflake and the like. They're posting a solid increase on their profits in their reporting period. And that's despite the inflationary pressures faced by consumers. What did that indicate what did they indicate rather about what the biggest drivers for the growth in profit margins was for them in the period?
The guys are very careful when it comes to their customers. They understand that their customers are under pressure. Hence, they're very careful before they can even increase prices. And yes, their revenue was up 23%. And we know that was helped by operating performance. And we saw that, yes, when it comes to the whole issue of their headline earnings per share, up just under 40%, I think it's 39.8%. And that was also lifted by operating profits doing that great. And also the after-tax effect when it comes to the net finance cost. Remember that 1.5 billion loan that they had from Brent has been converted into equity, so that help when it comes to headline earnings per share. And unfortunately, the guys are not yet paying us dividends, but they promise to pay us dividends next year.
Let's go to Pick n Pay now, ditching the opportunity to buy a distribution centre that was built and owned by Fortress. They were going to get about 60%, if I'm correct, Makwe. Now Pick n Pay is saying, actually, we'd rather conserve any cash that we have and manage our costs, but they will be leasing it for about 15 years. Your thoughts on Pick n Pay's decision to save costs rather than to expand on assets like distribution centres?
I think it was a wise move because remember the guys were supposed to pay almost 1.3 billion for that, and that have the guys already secured that kind of a loan. But that right, they might as well focus their money and energy on trying to continue to opening new stores and refurbishing new stores. Remember, they're continuing or they're in the middle of implementing their turnaround strategy. So definitely, it's wise for them to concentrate on that. And yes, they will be leasing that for 15 years, and I think at a yield of almost 8.5% of the development cost. So it's not too bad for them. And anyway, they've got the first right of refusal.
Yeah. And then finally, this is quite an interesting one. Capital Appreciation, they are a fintech company that has various offerings that they have. And they are really struggling with GovChat, which is a government platform that offers services from SASSA or the COVID Relief Fund. Their loan that was extended to GovChat really just not doing well. And it showed in the profits that were lower in the reporting period.
Definitely, and hence their profit as headline earnings per share are expected to go down by 44% because they had to make a provision for that credit loss of almost 70 million because of GovChat. But you look into their revenue up almost 19%, and the guys continue to attract very high profile local and international clients, and they also managed to diversify their revenue. Now we know that a year ago, revenue from non-South African operations were accounting for 6.6%, but now they're up, accounting for almost 5.2% of the group revenue.
No, thank you very much for that update. That is Makwe Masilela, who is from Makwe Fund Managers, wrapping up the market day that was. And of course, we'll be back in the next bulletin speaking to an economist about the GDP data that was released today and really the outlook for South Africa, given the power cuts as well as the infrastructure issues that are being dealt with by companies who have to deal with a Transnet infrastructure.